All right, what's going on, guys? So I'm driving here to the Supercharger, but I wanted to talk about a very interesting topic. If you guys are new to the channel, as always, subscribe, turn on post notifications so you don't miss any of these videos. We post a lot, and also check the link below for the free stock trading course that we have. It's entirely free, and we got a chat room and all that. So what I want to talk about in this video is the difference, or stocks versus real estate, and kind of weighing the two and seeing which one is best, which one's better, all that stuff. Because I saw this video, someone tagged me in it and they wanted me to make a response, and I thought it was a great video. It was with Vlad TV and Jay Morrison. He's a big real estate guy, and they were talking, you know, stocks versus real estate, and they brought up a bunch of points. And, you know, really one point, you know, they talked about was, okay, stocks are for richer people. You can make more gains in stocks than real estate. Not everybody could buy a house. So I want to talk about that. And right off the bat, I will say, this is from experience. I do both, you know. I'm active in both of them. I love both of them. I always say this in my videos. I've made the fastest money. I've made the fastest money in the stock market. I've also lost the fastest money. And on the reverse side, I've made my largest gains and the most money over time in real estate. So putting it in a perspective, you do need to be rich for stocks. At the end of the day, if you're now, I'm not factoring in options trading, and I think options trading, you can start with low capital. However, at the end of the day, to really take advantage of the stock market, you're gonna need a lot of money. And that's kind of what even Jay Morrison was saying regarding Vlad TV, that not everybody was looking and buying the same Calabasas $1 million homes that he was. And overall, just people don't have that money for it. And then on the reverse though, he was saying, well, not everybody has enough money to buy a couple $100,000 home, but the fact of the matter, the average home price in the United States is like $250,000. So it's really, really low. And in other places, and I'm gonna make a video, you could find a house for less than 100 grand in a lot of every state, I think, honestly, even California. And you know, it's just about finding the area and what you want and your goals out of the property. So again, you can get a house, and the issue, he was saying, oh, well, you know, people don't have the 20% down payment, but they could invest money in stocks. And the truth of the matter is, like Jay even said, you could get houses. There's Wells Fargo loan programs for 3% down. I know how to get them for 1% and 0% down. And now some people say that's just unrealistic. You're not going to find that. It doesn't exist, yada, yada, yada. But at the end of the day, you can find them. It just comes down to finding the deal. If you find the right property and you could go find the information, you know, it makes sense that it's a deal and you get it below value, that you can. Or if you do have a lot of money, you will, you know, if you could prove steady income, it's easy to get. It all just depends on the loan program. And now Dodd-Frank is getting passed, you know, they're rolling it back. So it's gonna become a lot easier for people to get a oh, I just cut that guy off on the lane, my bad. So there's that. But now also in terms of stocks, you aren't going to be able to, you know, if you're not using a lot of money, that's why I say for people, for me, I think once you have money, get into stocks. I say do real estate. You could get income off being an agent, wholesaling, and then go into stocks, because if you don't have a lot of money and you don't know how to trade options and make those big gains off of the little amounts, your $5,000, $10,000 isn't going to take you much. Like, I had a friend asking me about buying Facebook the other day. He said, I wanted to put in, you know, $10,000 and buy it here at the dip. I said, even then, it's going to be good for the long run, but even then, Facebook's at a high price. But even if it bounces back, you're only going to make $1,000, you know. Whereas you could leverage a home, and this is the thing: can you do leverage in stocks? Yes. But why I like real estate over stocks for most people is just the fact that you can get into it and leverage a $500,000 asset, a $200,000 asset, way easier, way cheaper than trying to leverage $200,000 in stocks. You're gonna need a lot more. You're gonna need at least $100,000 in stocks to leverage that. So I think stocks versus real estate, for the average person, it's way better to do real estate. Now, if you're above, now it doesn't mean don't do stocks, and I'll get into that, but if you are now, you have income, you have good income, you got $20,000, $50,000, $100,000 in savings, the stock market is for you. You could definitely take advantage of it. You're making money elsewhere. You probably already own a house, or even then if you're renting, and you know, again, buying isn't for everybody. Renting, it does make sense for most people, and depending on your type of lifestyle and what you're looking to do. And in general, if you could take that money and really this goes to decide, hey, stocks versus real estate, what should I do? The goal for anybody in finance, and this is how I look at any investment I make, is if I don't put my money in this, what should I, can I make more money elsewhere? So some people say, why are you gonna pay interest on a mortgage, do all that? Well, I prefer mortgages, and I'm fine with that because, should you put 20% down? I don't believe that, because I have the ability to make more than the 4% the mortgage is charging me. So if I'm paying 4% interest on my money, if I only put 10% down, on a $100,000 house, put down 10,000, keep the 90,000, I have an ability through stocks, other flips, other investments, and other investing in other companies, and not on the stock market, I'm talking private equity, I could go make more than 4% than that. If I put that in the house, I instead of paying 4% on a mortgage, I could go take that and make more than 4% elsewhere. I can make at least 8 to 10, and that's conservative. So I'm gonna go and do that. So if you can't make money elsewhere, yeah, go put a high down payment. But like I was saying though, if you make a good amount of money, then yeah, stocks is gonna be for you. You could start putting it in safe investments. You could put enough money to yield dividends, reinvest them, and then also start diversifying your portfolio to hold stuff that is gonna get you, higher risk, higher growth opportunities. That's totally okay. But again, so what I'm saying is, I think for the average person, real estate is better. However, it doesn't mean you don't just go away from stocks. My plan that I always give to people is simply get into real estate, or go and take real estate out of the picture. Just get income, find a way to get income and take 20% of that income, put 10% of that into a long-term portfolio, 10% of that into an active trading options account, and just add to it weekly, add to it monthly until you get comfortable, and paper trade all along the way. I have the video to set that up, and go from there. I think that's just one of the simplest ways. It's an easy, you could call it a financial plan. That's what I will. I'm not saying it's an official one, but it's just very easy, straight to the point. It revolves around saving money, putting in assets, and then go from there. But then also, if you do have a job, you do have income, don't be intimidated by real estate. Don't let the prices, how much money you need or whatever, intimidate you. You could contact me, go contact the lender in your local area. You want me to refer you people, I can. Just go, I want you to explore and find out yourself and see what you could actually get, because if you tune out to real estate, you're gonna miss the opportunities that most of you could get in. And honestly, if you're already renting and you plan to stay in the same place already and you're already paying rent, you got a job there, you're not moving for any reason, that's an easy decision. Go buy a house, go see. And you might say prices are too high. It's all about looking, and I'm gonna post a video on how to find the houses. We're even gonna come out with a free real estate boot camp for you guys too, so be patient with that. But in general, it's pretty easy for you guys to accomplish in that sense. So stocks versus real estate, I think it's just for two types of people where it fits, and the type of activity needed. Because again, there's real estate investing now, flipping, wholesaling, even managing a rental. It does require more work. You are gonna have to manage a property. People don't have time for that. But the thing people really miss out, you could hire and outsource people to do that easily, a rental management company, and at the end of the day, for what you're getting, it's super easy. And now that's also the next part too, I'd say. Real estate isn't going to be as advantageous if you're only aiming for one income property and you're not really looking to get money through either commissions, wholesaling, and flipping, and finding other ways to get quicker velocity with real estate. Because if you're only getting $400 a month and you're putting a large down payment off a rental property, then the stock market might be better for you. But again, that goes back to it circles all the way around. You have to have that money in the beginning to invest with. So if you already have a good amount of money, the stock market's there for you, but real estate is also, I also think that's a close second. I had someone even say, I invest in big cap, big equities, and I say that's good, but if you're now holding that type of stuff and you're all in equities and you're not into stocks, then you're kind of at real estate, you're kind of at a downside. And really, to understand the difference between the two, stocks are a liquid asset. They are a liquid asset. in its paper money in a sense. You could get in and out of a stock quickly. You could sell $100,000 on a stock very, very quickly, get your money out. You're never really tied to it, and that's potentially why it fluctuates a lot, but also why you're not even going to be able to get as much gain sometimes in the short term. But again, I will say that too, if you buy stocks, have a 5 or 10-year plan, 15-year plan, buy and hold, and you're identifying value stocks as they grow and as your experience in life, like seeing when Facebook came out, seeing Amazon as Amazon blossom into the behemoth that is today, you're gonna make a killing just doing that, buying and holding. Don't even worry about trading. But again now, on the reverse side, real estate is a real asset. It's a liquid. It takes time. It takes at least 2 weeks to sell a property, and there's something, it's why it's called a liquid, because you can't buy and sell in real estate without losing money in between, because it takes time to sell. There's a lot of taxes, fees, stuff like that. But in general, you're gonna get bigger gains and realistically safer. You have something backing it up. Real estate prices aren't gonna fluctuate. And that's the thing, a lot of people say, well, Josh, what if the market crashes and real estate's this? At the end of the day, the market has only crashed one time, how it did 50%, like it did in 08, one time in history. Maybe I think last time was Great Depression. That just doesn't happen. But now, and this is the opportunity I see with real estate, is that since it's gotten to the point where so many people in our generation, and even people 45, 50 and younger, everyone has that in their rearview mirror right now. So for them, that's all they're going to be seeing. It spooked a lot of people, but I will show you, I'll put the stats there. The home ownership rate is slightly going up in America, but that spooked a lot of people, and that's what people are scared, and that's where there's a real good buying opportunity. But it doesn't mean prices aren't high. However, you got to understand, if you want to wait 2 years to get into the real estate market or wait till it crashes, what are you going to do if it goes up? It's easy. It's just like with trading too, though. You just got to make a plan, and if you come up with a plan, that's really going to get you, it'll protect you from buying too high and going low, and have an exit plan, have a strategy, find a way to get in and out quickly if it does turn against you. So there's that. What I like to say, I like them both. I think it's for two types of people. I'm on both sides. I've been rich, I've been poor. I could see both aspects, and I like them both equally. And I think stocks are appropriate at a different time, and real estate is at a different time as well too. But I think anybody could get into real estate's more accessible. It's definitely more profitable, and I think stocks is the secondary source, and that's what you got to pair it with. So I'll leave it with that. Hopefully you guys like it. I'll make a part 2 to this. Let me hear your questions. Let me know what I didn't cover, and we'll go through that. And make sure, again, subscribe, drop a comment, drop a like, turn on those post notifications. I love you guys. Stay in school.